Hi guys, so they just released December 2018 inflation data. How did we get to this result? Is it good? Is it bad? How does it impact the economy? And how are markets reacting? Check this video out with the goal and the intent to help you win in the markets. Hey guys, so good morning. I've just finished breakfast and we're in for a treat today. There's a lot of good data that I'd like to talk about for the next few minutes. If you all know, over the past few months, I've been talking about the underpinning movement that will cause the markets to move up and down. For 2018 was the effect of inflation, and how inflation would have moved over a course of time would determine consumption, which consumption is a great part of GDP, and consumption, how it impacts consumer spending, will impact consumer stocks, which in turn will hit the markets. That's why last year the markets were relatively not as robust in a certain aspect because inflation hit a very large percentage. Now we hit 6.7% last year as compared to where we were. Please remember guys, November 2015 inflation in the Philippines hit 0.7% in November 2015. Fast forward 3 years later, November 2018, inflation hit 6.7%. So this is something relatively high, no, and unexpected, and the BSP forecast for 2018 was around 2 to 4%. So the movement that we were seeing was underpinned by whatever inflation will be. So if inflation was continued its upward path, continued to be bad, it would somehow affect where the market is headed as well. So that's one. Now the good news, since the peak nung last year, after hitting 6.7%, we started to decelerate. We got 6% November. Then the good disclosure that we got was December 2018. Inflation slowed down to around 5.1%. So this is very good because it's not just it's good economic data, but it gives you a sense, it will give a sense of confidence. So when inflation is normally high, what happens is people condition themselves also now not to spend or to skimp off on this or not to buy this first, not to go into this, and it sentiment plays a big toll in the markets, and it plays a big toll also on consumer spending. It plays a big toll on the economy, and you have to remember our economy is 70% consumption driven. Any effect, any change on people's habits of spending will also somehow dampen our economy as well. By the way, what caused this to drop? What caused this to be around 5.1%? Number one, pretty much is this: oil is lower. We've hit one of the lowest exchanges for oil over a stretch period of time already. Number two, the dollar. Now, I've created videos about this, that the US dollar is already out of its upward trend, so you can expect that the appreciation of the dollar up against the peso has already changed, has already shifted, meaning we won't expect fears that there were talks last year na magpa 5.8, 5.9 tayo, but we're not there anymore. So we'll just probably consolidate. The dollar at 52 is at a better position than where it was almost at 55 last year. And then there were measures done already, rice tarification, importing rice. What does this do? It allowed the import of rice allowed rice prices to go lower, which for me, it was one of the drivers, since there were a lot of storms, a lot of crops got hit. Rice was one of them. The price of rice went up so much, and the lowering of rice prices has deeply impacted inflation, and oil prices being lower has a big impact also. Why jeepney fares got slashed. I think it got slashed by 1 peso per trip. So in that alone already impacts not just the middle class, but it impacts the broad range of commuters in the Philippines. So This is good. We're in a downward trend. There's a possibility pa that for 2019 this could go lower, with the expectation of number one, number one, the base last year was relatively higher, so you have a high base. In inflation, there's a possibility that, hey, the percentage of growth for this year is not as high as last year. That's one. Number two, you can't really expect the dollar to go higher already, for the reason that the BSP created measures to be able to somehow stabilize the economy, meaning or somehow stabilize the peso. So since there's a higher interest rate already, the peso is more valuable now. More funds will at least stay in the Philippines, or it will lesser funds will leave the Philippines than what it did before, since our interest rates are higher, meaning the peso gets protected. The peso gets protected. People won't be raising their prices. Importers won't be raising their prices. But I think in terms of risk, what you need to consider and what you need to watch out for is the second tranche of train law just happened. The second tranche of train law just got implemented this January. How does that impact everything? Part of that is an increase in gas, kerosene, and diesel prices. So we have to monitor how will that impact also inflation on a general perspective. You have to remember Petron and a lot of gas stations already have increased their prices. We're not even actually sure if are those old prices that they just increase, buy prices that they just increase the price to have larger margins. We don't know. They say not, but what we're trying to say is every time oil prices would increase, every time pump prices would increase, it will impact. It will definitely impact consumer behavior and spending. With that also, I think with inflation slowing down, I believe the biggest beneficiary in all of this are consumption stocks. Consumption stocks, you have to remember, even when inflation was up, I was still very excited on how consumption would be. I still believe consumption is still the largest part, the biggest parcel of our economy that Filipinos will spend regardless. At my back, that's where, for those who have been following the videos, I placed a video here that there's a Taiwanese milk tea shop that's there, that there were 1 hour lines. Filipinos love to spend. It's part of Filipinos culture. Spending is part of how Filipinos do things, and with inflation slowing, that purchasing power will just continue to be stronger, better, and it translates into a lot of the consumption stocks starting to move up. RRHI broke out yesterday. Pure Gold is having a field day, also starting to move up even further. SM Prime started to break out from another range. Jollibee has still been pretty much strong. So a lot of the amazing direct consumer plays are doing very, 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 very well. As of this point in time, the PSEI, this is at 10:16 a.m. As of this point in time, the PSEI is up 7,711. We're green for the day on the backs of this economic data. But to add flavor to this also, as long as we are above the moving average that I mentioned yesterday, the 7570 range, as long as we stay above that, you can expect the market to continue its full reversal. You can expect, please remember, we did try to break out at some point late last year, but the support did not hold. Since the support did not hold, it converted itself as a resistance. That's why the past few days have been special, because after breaking out of that 7570 level, it gives us a firmer foothold that the market is now bullish, that the market is reversing, that this is probably a legit reversal already happening. But your goal as traders and investors also is not to be emotional about it. If you see it does not hold at some point, or the stocks that you're buying, as they start to reverse, those support levels do not hold, don't be apologetic, sell, get away from that position, and just stay out. So that's what's amazing about it. Then if this upward projection will continue, position traders continue to position, we can be on our way back to where we were before. But from a quick trading standpoint, the next resistances that you need to watch out for is 7.9, and the strong one is at 8.1. So I could expect that should the market continue to progress higher around 7.9 up until 8.1, there might be some profit taking, there might be some selling, because at the end of the day, markets do not run up forever. We have to respect technical analysis. We have to respect price ranges that if it fails to break out from those levels, you sell. And that's how you make money from the markets. You just take it as it is. You take economic data as it is. You take numbers as it is. You take technicals as it is, and then you weave them all together, and then you combine that with your trading plan. No emotions involved, no hype, no speculation. You not chasing news, and because at the end of the day, you have to make this your style, your strategy sustainable. You have to make this in a way that it works. You have to find a sweet spot where you get to use strategy, you get to use numbers, you get to use market action without you chasing news. Because if you chase news, you cannot replicate news. I cannot stress this over and over and over again. Find a strategy that you can replicate, that you can do, and you can repeat over and over and over and over again, and that's how you can win. So anyways, good economic data. So it somehow gives legs to what our economy will be for 2019. I'm excited to see what our GDP will be for fourth quarter and the end of 2018. I hope it's something that's positive. I hope that it's something that will nudge investors to come back in our markets, because you have to remember, while we are moving fast, everyone else in Asia is also moving and developing at a faster rate as well. So interesting times. Again, 2019 is an election year. GDP wise, we got it covered. A lot of the media outlets will make a lot of money this 2019, and a lot of consumption stocks, of course. Every time there's an election, they're the ones who will make pretty much a good amount of money as well. So that's it. Thank you so much to everyone who's joining this video. Expect more and more and more videos like this, as the heart and the goal of this is just to educate you, to teach you, to push you, to gain the understanding that you can win, that you can trade, and you can be in the markets. The stock market is one of the greatest areas where you can create wealth for the long term. And what's nice about that is you get to live life at your own terms. You can eat breakfast whenever you want. Just finish breakfast. It's 10 a.m. woke up late, but that's what's nice about investing here. The narrative is life at your own terms. The narrative is freedom. That's what financial freedom gives it. That's what business, that's what entrepreneurship, that's what investing gives. That it's not about money, but it's about freedom. It's about doing things when you want it, when you need it, that you're not confined by the cubicle. And that's what I want you to have. And it's time, and I'll say this over and over, I guess the prevailing theme of what I've been saying over the past few months is that it's time Filipinos uplift the way they see themselves. It's time that you see themselves, that Filipinos, we're not poor. That we set the standard, that we change the generation, we change this generation, that this generation will be richer, bigger, better, that we will leave a better inheritance for the next generation after us. And if it's me giving videos, creating videos to help you, encourage you, give you the right information, I'll keep on doing this. I'll never stop doing this. So that's it for now. I hope this video helps you trade well, trade strong, trade smart. Marvin Germo. See you all again soon. Bye-bye.